they're new and all they're doing is just smiling and shaking hands, it's only going to go so far. So interest rates are going to be driven by the 10-year treasury, typically on a 30-year mortgage. It's driven by markets, everything from oil prices to speculation. I mean, you name it, it's all. I've seen situations where I have people with like low 500 credit scores get up to like a mid 6 or high 6 within 30 days, and then they're buying houses just because our connections. We connect them with people who know how to make old collections go away, make, derogatory stuff go away.
You only know what you know.
Yeah.
And it's best to reach out to a company, be able to help you out. Professional. And not just ask ChatGPT. Because I know like most people will be like, well, ChatGPT, I had this report. It's like, and we're like, oh. All right, guys. So today we have Frank Paredes from...
I'm with Integrity Home Mortgage.
Integrity Home Mortgage. And Frank, welcome to the podcast, Prospect for the Soul. So we're going to talk about some business. We're going to talk about mindset and things that consumers and realtors should know as far as like behind the doors on some things that some people might shy away or they might feel inconvenient to explain or tell. So start us off real quick about what do you do with Integrity and what is the things that you do for agents and for buyers that makes you guys different?
Yeah, thank you. Well, first of all, thanks for having me. I really appreciate it. This is a great setup, and I'm excited about the new brand here, the Raw Steaks for the Soul. So my name is Frank Paredes. I'm a branch partner with Integrity Home Mortgage. I'm also a sales manager there. I've been in the business for over 16 years in the mortgage business. Integrity, it's not new to the nation. We're actually a nationwide company. We're based out of the East Coast, but it is new to San Antonio. So we've only been here for 2 years. And myself and my partner, Carlos Rodon, we run the office just right down the street here on Monteverde, 281. But we specialize in relationship mortgages. So we help clients, veterans, investors purchase real estate, and we do it on a relationship basis. We really like to focus on establishing that relationship. We don't see it as a transaction. We really want to help educate folks, people that are maybe not approved somewhere else. We usually get them qualified and approved with us. So we have every product under the sun, and we'll talk about that a little bit more, but like the QM loans, non-QM loans, broker deals, we offer it all. And we specialize in VA, and we're very good at what we did.
Absolutely. So just breaking that up a little bit, begin with like the differentiator between like a local company versus like those big brand, massive banks that consumers think like, oh, I went to like my bank, blah, 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 and I have an application with them, but they haven't responded.
Yeah.
And versus like you're saying like a relationship company, where it's like it matters. It's not that it's different in the way that the service is going to be or the product itself, but also the relationship. And I think that's very crucial. Where have you seen that play out big?
Yeah, no, that's a great question. We see a lot of these .com people, Rocket.com, and, all these other ones. You're talking to somebody in a call center, probably clear across the country, So people that are buying here, buying locally, they could literally walk into my office, have an appointment, have a consultation. We guide them through the process from start all the way to closing. And then we even maintain that relationship post-closing. So things come up after closing. Where's my first payment going to be sent to? How do I file for homestead exemptions? All those things we help our clients with. So all that matters, in the grand scheme of things. And it matters to our agents, our referral partners, because now they've secured that buyer for future, referrals down the road, whether they sell that house or buy a different property. It just all kind of makes it really, really seamless. But I will say, as far as being a smaller lender, now we are considered a boutique shop. We're still very large and in scale. So we have one location here in San Antonio. We have one in Houston, actually two in Houston, one in Dallas, and then we kind of spread out east, after that. Right now, our goal is to continue to keep growing. So we're excited about that for sure.
Absolutely. And then going to the second part, as far as being a small boutique and the quality and type of products that you guys offer, talking about sometimes people that got denied. You see, like for us, like entrepreneurship is really big.
Yep.
And we dealt with this throughout the podcast, interviewing entrepreneurs. And one of the things that I felt is that the mortgage industry is not so much set up sometimes for the entrepreneur, and the system itself, not that they're not just qualified, but the traditional way that sometimes it's easier for somebody that works at a W-2 job, like say a fast food chain,
Sure.
and they make like minimum wage and they can get a house much faster than somebody that's starting a business and they make over 100,000.
Yeah.
What kind of programs are there for like this type of investors or entrepreneurs?
Yeah, so we have a lot of different programs. It's funny you mentioned that. So what you're talking about here is basically fitting into that box, right? That QM box, that qualified mortgage box. That means that it's backed by Fannie, it's backed by Freddie. It can be sold, in the secondary market relatively easily, right? So the risk tolerances are pretty low. So when lenders only play in that space, it becomes very confined, right? Like you just said, the W-2 buyer, but the guy that's self-employed that has a lot of expenses and writes a lot of things off, it's harder for that person to qualify, right? So we offer bank statement programs, 1099 programs. We even have a no-doc program. I mean, do you remember no-doc way back in the day?
Like the mate?
So we have a no-doc program where you don't have to have, anything. You have a good credit score, you have cash down, and get a house. For investors, we have DSCR type loans. Now, here's the thing that I will say, not every program is the same between every lender. A lot of the non-QM space, the non-qualified mortgage space, it's all based on risk tolerance. So some investors will be willing to do stuff that hard money loans are able to do. Others say, hey, we want to kind of play on a conforming level, kind of like with Fannie and Freddie. So it all depends on which investor you're going through for those type of non-QM products. That's why somebody like us, who's a mortgage banker, we have a sea of different investors we could choose from. So are you familiar with the difference between a mortgage banker and broker and all that?
Yeah, and then that's what I was going to go to. So like some people might not understand, like as far as like with the big .com banks, that's their own underwriters and so forth.
Yep.
But you having the ability as a mortgage broker that you're able to shop around for this kind of people based on the criteria, correct?
Yes. And actually, I just want to kind of clarify something. So we're not a broker. We actually are a mortgage banker.
Mortgage bank.
So what that means is we are the bank. So we have our own in-house delegated products as well that belong specifically to Integrity. But then beyond that, we could do the things that brokers could do. So if we need a broker to another company, we have those relationships. But here's the cool thing is we have a lot of delegation, in-house delegation. That word delegation just means we use our own underwriters. So it starts with us, it goes to our underwriters, and then we finalize the deal, even though it's another person's program, another bank's program. Does that make sense?
Yeah, it's like you're vouching for them for saying that.
Exactly.
In the raw.
Yeah, exactly. So what brokers do, unfortunately, is they don't have the bank. They don't have the luxury. So they have their products aren't delegated. So that means that if they're going to write a loan with, New American Funding or somebody else, they have to actually go to their underwriters to submit the deal. If all of a sudden that deal falls apart and they need to pivot to a different lender, they got to go to that other lender's underwriters to get the deal done. We have a lot of delegation in-house. So those loans, like we were just talking about, the DSCR loans, the bank statement loans, we delegate those to our own in-house underwriters. So it's just an advantage to that.
Absolutely. Yeah. And I see that the big advantage on that because we've seen it happen so many times that it's just crazy.
Yeah.
And just quickly though, before we start getting all the comments about like, yeah, like those banks are wanting like screw with people in 2008 and so forth. There is still some due diligence that's being done to prevent things that are happening like before. However, like the people think that there's not, but I mean, you're still verified income and you said credit. I mean, obviously if somebody has a good credit, but it's just the income because ultimately, like I tell clients either there's two soups and I call it the soup. I'm talking about steaks and we're going to get either you have the credit and maybe you don't have a lot of income. I mean, we can help you with some programs. And there's some people that have a lot of income, they don't have the credit, but there's usually like those two keys that are very much needed. Yeah. There's people that have the credit and the income, but they don't have the paperwork trails because they're investors or they're entrepreneurs. So for all those types of people, I mean, there still has to be a way for the bank to secure themselves. And that's what you're talking about, like the in-house underwriters. Now, some people might not know, especially like clients, and because we still get that a lot, what is an underwriter and what do they have to do with the whole transaction? If you would like to just explain to them like the big role of the underwriter, because that's why I told them like the underwriter is like the one that says the yes or the no. But in your terms, how would you describe it to them?
Sure thing. So I'm going to take a step back actually and describe kind of
The process.
the process looks like. So usually when somebody comes in, they speak to an originator. This is somebody that's licensed to originate loans. Like, for example, I have my own originator's license as well, so I help my clients. My job as an originator is to underwrite that loan. It's basically to do the approval up front. I have to know my guidelines. I have to be able to say we have a program for this buyer. I have to be able to pre-screen this as best as I can, because I don't want to give that buyer false hope, right? I want to make sure that if I tell them you're pre-approved, that it actually goes to the underwriter and it stays pre-approved. So underwriters will actually underwrite to protect the institution. So what they're checking is they're saying, okay, this loan's coming into my wheelhouse. I'm going to verify everything that the buyer has submitted, everything that the loan officer has packaged, and I'm going to verify that it meets our guidelines. And either it's a guideline to retain the loan or a guideline to sell the loan. Is basically watching out the risk for that company. So they're signing off on the entire file. Underwriters is a common thing in insurance and lending institutions all over the place. I used to manage a bank a long time ago. There's underwriters at banks, there's underwriters at credit unions, there's underwriters everywhere. So they're just there to protect house from any type of loss, that type of thing. So they're reviewing the file all together and they're signing off on it, making sure it's good. And if it's good, we move forward to closing.
Sweet.
Yeah.
And then, I mean, there's that process because he's the originator, but then it's like the originator and then the processor, which also is like another filter. So there's several filters before it actually goes to the underwriter. So once it gets there, is that the due diligence has been done. And obviously, like you're saying, like you don't want to give anybody false hope. I mean, I remember back in the car industry, I used to sell cars and we used to go with a sales manager. They call him the magic man. Like, oh yeah, he's approved. Go, let him take the car. Later on, he did the paperwork. He wasn't approved. Like, oh, go call him back. Tell him we need the car back.
Yeah.
And who has to be that front face? We had to go and get the car back. It's like, and I hated that because I feel like I had too many deals.
Yeah.
And then you had to like call back so many deals.
Sure.
And then the people, I mean, they were pretty upset. And there was another sales manager, and he was like, nobody liked him because he was real strict. But the strictness that he was like, yes, it's a yes, and no is a no.
That's good. Yeah.
And I got to see those two types of sides from early on before becoming a broker. And I
see that in this industry. There's lenders that do that. They'll throw, we call it spaghetti on the wall. They'll throw whatever they want to underwriting and give that buyer false hope. And they're not doing their due diligence up front or, asking the right questions or, even looking at documentation. And the next thing you know, it goes to underwriting. The underwriter says, hey, we need this, this, and this. They can't produce that. They don't have it. Or maybe they have it and it doesn't look good. Then what? You know what I mean? So we don't have the luxury, at least I don't feel like it's fair for buyers to go through all that hassle. I don't have the luxury of telling somebody, hey, approve, and then changing my mind down the road. You know what I mean?
And it's a big thing.
It's a huge thing. This is one of the largest, transactions somebody's probably going to do in their life. Let's say buy like a yacht or but most people, they buy one house in their life, and that transaction, it's either going to go smoothly or it's going to be, just a nightmare. And we make sure that it goes smoothly.
Absolutely. So then there's also like the different types of letters that are given out because people think that they're all the same. And I try to explain to sometimes like even our clients, like it's not the same. Being like there's a pre-qual, which is spaghetti on the wall. They're pre-approved, which is somewhat steady. I mean, that's more leeway. But then there's also like the Form B, which has actually already gone to the underwriter and it's more solid.
Yeah.
Now, can you explain a little bit more in depth of those and why people need to understand that not because you go to this online company and you got like a pre-qual like right away, you can go and shop.
Yeah.
And what could happen, like you were just talking about that, and there's no verification, there's no contact, and then there's no document submitted because even those documents say like there's no documentation proof. I mean, they were just based on credit score or whatever.
Exactly. Yeah. So typically when somebody fills out a mortgage application, which we call a 1003, they're plugging in information regarding their income. We check their credit and we take a look at collateral if they have an address or something like that. We're taking a look at assets as well. So we're pre-screening that entire application, but we're just doing that. Whatever they've entered, it's based on what they've said on that application. That's called a pre-qualification. Did they meet the qualification based on what I'm looking at right now? That's not really worth very much, right? We need to verify what they've said. So that's when we ask for next step, which would be documentation. Send us your pay stubs. Send us your W-2s. If we're doing a bank statement loan, send us your bank statements. If we're doing a DSCR type deal, let's talk about the investment property. Let's talk about how much rent that property could yield. We got to start getting figures in and start documenting things. Once we have documentation, then it becomes a pre-approval. That's when we issue a pre-approval letter. Just holds more merit, more weight. If somebody's really concerned, we can, like you said, submit it for upfront underwriting. So we take all the documentation and we submit it to the underwriters even before they have contract on the house. And the underwriters check our work and say, this looks great. Let's go ahead and move forward. If they have that documentation checked by the underwriter, we provide that upgraded pre-approval, and they could continue shopping and shop for a house. So it just gives us a little bit more confidence. Upfront underwriting is a big thing in the industry, and a lot of people do it. Some people don't. Our company does. Something else that our company does is we actually write something called the integrity promise. So this means when somebody gets contracted, and if we can't close by the estimated close date, we pay the buyer $1,000, we pay the seller $1,000, and the agent $1,000. So we really put our money where our mouth is. We want to make sure that if we're telling you, hey, you're pre-approved, it's going to close, it's going to close.
And in today's game, I mean, that's really, really important. I mean, one of the things that we talk to like clients at our initial consultation is that once we're under contract, like the date on the contract, there's like a 10% chance based on everything that always happens that we're going to close on that contract date and not to be afraid. And then the thing that a lot of people think sometimes is that once you give them that approval, that it's 100% and they don't have to worry about anything. And here's where like the raw truth comes in, because they don't realize that they shouldn't buy a car. They shouldn't buy appliances before you move into the house.
Yep.
And not because you have like that underwriting approval and so forth, you go max out the credit cards, because sometimes they'll do that and they don't realize. Sometimes either like they'll tell us that, well, my boss was like this and that to me and I just quit today. And it's like, and as a fiduciary, I mean, I have to disclose that. And it's like, you just killed the whole deal. And there's deals that fall apart like 3 weeks, 3 days, hours before closing. We have deals right now going on with like, we can't get funding because the sellers are getting divorced and they're fighting over who's going to keep the money.
Yeah.
So all these things we keep seeing that, and I keep pushing even with like this podcast, like that's where the actual value of the agent comes in, because like anybody can, yes, list a house, show a house, or you don't even need an agent to show a house, but like the value comes in when referring partners like yourself, or like when things start getting shaky, or like those orientations where it's like, here's my hand, I'm here to guide you through the whole process because like I've been there, I know how it is, I know your feelings and so forth.
Yeah.
And
absolutely. I completely 1,000% agree with you, man. Like the reason why I think an experienced agent like yourself is so important is because you hold that transaction together. You manage the emotions, you take them through the highs, you take them through the lows, you know what I mean? And you get them across the finish line. So it's very important. The same thing equally with a lender. Like if you don't have a lender that matches that energy, if they're new and all they're doing is just smiling and shaking hands, that's only going to go so far, So knowing how to pivot out of situations, knowing how to handle tough situations, things, like you said, things come up. What are you going to do? Have you seen that before? Kind of like equating it to like a surgeon, right? If you're in surgery, you start bleeding out, it's either somebody's going to freeze up or somebody's going to know what to do, So it's the same type of concept like with us. I think people will laugh if I compare myself to a surgeon. I'm just alone, right? But the same analogy, right? Like we need to know how to manage situations. You need to have that business acumen, have the connections, know who to go to, know how to get things done. And a lot of that is dependent on the actual loan officer themselves. Just like with you, it's dependent on you, So not every loan officer is equal. Let's put it.
It's the same thing with agents. Ultimately, it's like the same thing. I've gotten clients that they were like, well, I went through 3 different agents and they all told me I couldn't get approved because it's not an FHA, it's not a VA, it's not this, and I have to go and fix my credit and make a lot of money in order to get a house. It's funny that you talk about like that analogy with the surgeon.
Yeah.
Because like right now, the analogy that I'm thinking is because like with the Apollo mission that's going on, they're gonna launch tomorrow. It's like NASA, like prepare like NASA, because NASA doesn't prepare for what could happen. It's like they prepare for like all these things are gonna happen. How do we solve for them?
Exactly. Yeah.
And that's what I tell clients. I mean, I have a list like literally that we give them. It's like these are like 60 things that could, will, might happen.
Yeah.
So just check through them, and if something like that happens, just know that I have your back, and we have the connections and the network and so forth that we're gonna be able to get through it together.
Yeah. That's a tough conversation sometimes to have with you because it might scare certain people, right? Like, oh my goodness, like what happens? But it's setting the right expectations. Setting expectations is a huge part of this business. Just having a conversation saying, hey, look, we've submitted it this way. Everything looks strong. There's still a possibility that something might happen. And if it does, this is how we're going to approach and do. And that in itself goes a long way with people, understanding that like, hey, if there's a plan B, I know that he has a plan B. If we need a plan C, I know he has a plan C.
Yeah, no, we go all the way through the Z.
Yeah.
Yeah, and one of the other things is as far as like people don't understand as well as the interest rates.
Yes.
Like people see like new homes and builders like, well, they have 2.99%, they have 3.99%. Why if I go to this lender, why is he giving me like a 6 point something? And we have to explain to them like the national mortgage rate and then how like some buy downs and so forth occur that builders are able to do. Can you disclose some of that information and how like the rate and how does the rate come? And the thing that sometimes they freak out because they don't do is as far as like locking the rate.
Yes.
And like if we have a rate locked till like March 31st, which is today, and it ends tomorrow, but there's an extension. And if you don't have that, I mean, what's going to happen?
Yeah. Yeah. So that's, rates in itself is a huge animal, but, I'll answer the first part of your question, then dive into the second part. So, I want to say over the last 15 years, the national rate the average interest rate for mortgages is somewhere around like 4.5%. Right? And then the market kind of went down. People started getting those 2% and 3% interest rates. And then it went all the way up to 8%. Now we're sitting back in like the mid sixes, low sixes. All that's just market driven. So interest rates are going to be driven by the 10-year treasury, typically on a 30-year mortgage. It's driven by markets, everything from oil prices to speculation. I mean, you name it, it's all just driven by the market. So that thing goes up and down, quite a bit. And right now we're in a volatile market. So interest rates go up, they come down, they go up, they go down. So right now, again, we're between 6.5 and 6% right now, depending on credit. And that's for a 30-year mortgage. Now, typically VA rates are going to be lower. FHA rates are going to be lower than that. And then if you do like a 15-year, 10-year, or 5-year, those are obviously lower as well. So what we find is that these builders are advertising these 2% and 3% rates. Well, how are they doing that when the rate is 6 or 6.5? So they're doing something called a forward commitment. So what a forward commitment is these builders are getting money on the back end of the transaction before anything ever happens to say, hey, we're going to basically reduce this interest rate by X amount of dollars that we receive. So a lot of times these builders, they own both the mortgage company and the building company. So money is exchanging between them before that person even walks into that house to look at it. And if they do walk into the house and they say, I love this house, as long as they choose a house in that community, then they qualify for that lower discounted program. Now, if they were to come to an outside lender like us, unfortunately, we don't have that forward commitment in place. So we can't offer them that rate. We have to go by what the market rate is. So right now, builders are offering a great incentive for folks who want to qualify for those low rates because they have those forward commitments in place. So it's a great thing. I tell people, hey, do you qualify for that? And it makes sense. If you're not going to move in 7 years or 10 years and you want a new house, go to a builder. It makes sense, right? You save a lot of money. But let's just say you're going to move in a year, or you have to sell the house because you're going to PCS in the next few years, the military. Why would you on earth put yourself in a position where you're going to have a new build and you can't sell it because you're going to be competing with the builder or whatever the case might be, right? So pre-existing houses, there's a ton of situations out there for people to utilize somebody like us. Now, we also offer buy-down programs just like builders. So buy-down is a different form of getting that interest rate lower. So it works differently than the forward commitment. Buy-down it allows that person to get a lower interest rate in the temporary for either 1, 2, or 3 years. There's other buy down programs, which are kind of the common ones. So for the first year, maybe the interest rate's 3%, then it bumps up to a 4, then 5, and then all the way to 6. It adjusts to, full price after 3 years. There's 1-year buy downs, there's 2-year buy downs, there's different types. It's a great way to get somebody into a lower rate up front, and then it adjusts, gives them a little bit of time. The idea there is they get the rate, and then they refinance a couple of years later into an even lower rate. So, it works out for a lot of people. The second part of your question was what? Oh, the interest rate, the locks, right?
The locks, yeah.
The locks. Okay, so if somebody locks in a rate, that rate lock is usually good for a certain amount of time. So 15-day lock, 30-day lock, 45-day lock. All that means is that it's good. We have to go to closing before that lock expires. So it's the end of the month and that lock's expired. Like we have to try to extend that lock, which costs money. Do a relock at worst case scenario. There's all sorts of different rules associated with locks, and then all that depends on the investor itself. In most cases, if you have a good lender, they won't let that happen. You'll know ahead of time. And what we do is like, if we know the loan's going to close in a couple days, we'll just extend the lock and we'll eat the costs.
So that's good.
Yeah.
And I mean, having that promise of closing, I mean, that's pretty terrible. Like, I mean, I wasn't aware of that until today. Like, there you go.
That matters.
I think it does matter because, like, at the end of the day, like, the timing matters. And not because, like I mentioned, that some contracts don't close on time, but there's things that, like, I tell people, like, it's not because, like, us as agents wanted to close because, like, we wanted to get, I mean, it just doesn't happen. And you can either frustrate, you can either scream and yell, because at the end of the day, like, this industry is, like, just, like, the blame, like, oh, it's a lender issue, it's that the title company issue, it's like this. So it's like, we just step up and it, like, we're going to work together with everybody, and it's
absolutely
nobody's finger, because at the end of the day, like, we're all working together to achieve their goal.
Yep.
And the goal is getting the people into a house.
Yep.
And moving.
Absolutely. I agree. I hate the finger pointing game, and it happens with a lot of immature agents or lenders or whatever, you know what I mean? Title company reps. But when you have a good team, and that's why it's important to know like who your team is. You know, if you're a buyer and you're looking for a new house, go to a really good real estate agent, right? That agent's going to know who the really good loan officers are. The loan officer is going to know who the really good title people are, you know? So all that matters. It matters because, you know, you want this process to be seamless. You want it to be smooth. You want it to be good. You want it to be right. You know, you want people that care about you, you know? So many people don't care about the client anymore. And it's tough. I'm a Christian guy. You're a Christian guy. We go to the same church. You know what I mean? We're called to love our neighbors. Called to love our neighbors the same way we love ourselves. Why would I want to put somebody through something I'm not willing to go through?
Yeah.
You see what I'm saying? So.
And I guess that's a big main differentiator, because like you just mentioned from the beginning, like there's good apples, there's bad apples, lenders, agents, titles. I mean, there's all kinds of stuff, but that's where, again, and going back to a thing like we were like talking about yesterday, it's like, it's not that AI is going to replace people or this or that, because AI can only do so many things, and AI is a tool.
Yeah.
People that know how to use AI for the purposes of a tool, that they're going to be able to like get replaced to other people. But at the end of the day, like that, we're in a people's business, and people are crucial to this business, and the ones you build in your team matters.
Yeah.
So it's like very crucial, because like at the end of the day, like you're saying, like we're all in this, and it all comes back around. And there's like so many agents like, and all over the industry that are just as far as of numbers and go to the next transaction, and it's the end of the month, and I got to pay my bills, and I haven't sold the house in 10 months and so forth, and we're going to make this happen. And like, are you making it happen for yourself, or you're making it happen for your client? And letting go has been one of the biggest things as far as like I've learned, as for like just let go. I mean, you can only control the situation so much.
Yep.
And the biggest phrase is like, do the work and let God finish it.
Yeah.
That's it.
I love it. Do the work and let God. Just right there, let God. You got to do whatever he needs to do. No, I love it, man. I'm a firm believer that, you know, this process, home buying, is all about the client. I mean, if for some reason they don't buy with me, if they use me as a loan officer, it's okay. If I could have given them guidance, helped them improve their credit, offer them advice, point them in the right direction, it's okay. You know what I mean? Mm-hmm. God's my provider. He's going to take care of me. I have great relationships with a lot of different agents. We do well at where we're at what we do. At one client, having a great experience and buying the house is the most important part of the whole process. You know what I mean? I don't like forcing clients to do something that they don't want to do. I don't push them to do anything that they don't want to do. I guide them. I make recommendations. I consult with them. And at the end of the day, you know, I make, hopefully, their dream of ownership come true. Because, you know, we're providing that service and we help them all the way through the finish line. So it's a fun gig, man. It's a fun job.
And that's good that you're able to do that. I mean, there's a lot of things too that, sometimes like buyers or other people judge a buyer by its cover.
Oh, yeah.
But like that might be the person that knows another person that can bring you like 20 more deals, because like something like maybe they were not ready now,
Right.
but you give them the layout, you give them the blueprint,
Yep.
and they're going to go out and do the work or not do the work. But they live with that experience that you gave them. And then if somebody else asks them, hey, do you not know the lender or so forth? I mean, they'll reach out to you. That's one of the things that has been to my core that I've seen, like sometimes the good that you do to that one person might not come back from that specific person, but it might come around from somebody that might never expect it.
Yeah, they tell their family, hey, look, I got it.
Yeah.
Next thing you know, you're doing a $1 billion transaction or something. It's wild. What's neat about us is that we have a system, and a lot of lenders have this. I'm not going to act like we're the only ones, but where we have in-house tools that can help people with credit. So if somebody applies, let's just say they're not ready to buy, they're not in a buying position, we could figure out what we need to do, what steps we need to take to improve their credit score, improve their credit profile. If for some reason it's something beyond our control, I have great relationships with credit repair people who have discounted rates specifically for our clients. And then we help them, and I've seen situations where I have people with like low 500 credit scores get up to like a mid 6 or high 6 within 30 days. And then they're buying houses just because our connections, we connect them with people who know how to make old collections go away, make, you know, derogatory stuff go away, because they take the proper channels and know what they're doing on the back end. So we have those type of relationships, and it's all to help them benefit the client. So it's cool.
Yeah. Again, it goes back to the people business, having the connections, having the thing. And at the end of the day, it's like working with the people that have a team that are able to help you, guide you through all the different resources and channels to, again, get you to that goal of getting the house.
Yep.
And making it as smoother and accessible as possible.
Yep.
Yeah. Now, for that business owner that's watching this video,
Sure,
that knows that has good credit, but again, they deduct so much stuff.
Yep.
And they're trying to get a loan. Like you said, you had the bank statement loans, and then there's also like can you explain a little bit more?
So one of the best programs that I think we have out there is a bank statement program, but with different investors. It's not just one program. So I have a 24-month bank statement program, a 12-month bank statement program. We could use business bank statements. We could use personal bank statements. But let's just say somebody funnels a lot of cash through their bank account, right? Deposits, all that, and maybe it's $50,000 a month. But all their tax returns, take a look at their tax returns, it says they make $50,000 a year. Well, that's tough, right? To qualify for maybe a $700,000 house for $50,000 a year. So what we do is we go off of the deposits, right? We average those monthly deposits each month for either 12 months or 24 months. And then there's usually an expense ratio provided by a CPA, or we can use half in most cases. And that's what we use for qualified income. So you have $50,000 in deposit each month, $25,000 in income each month that we're able to qualify you for. I mean, you could probably buy a pretty big house. I've helped countless people in that same scenario do the loan. And it's really easy to do. You have to have a decent credit score above a 640, money down, at least 10% down, and you can do the loan. And a lot of these people that are in this situation, they like putting 20, 30% anyway. You know what I mean? They want to get a lower balance. But yeah, it works for a lot of business owners, a lot of entrepreneurs.
And that's what I've noticed, like the same way, like, and when I talk to them, they think that it's only them and it's only happening to them. And I'm like, no, it's like your situation, it's like cross country, like all over the place. And I mean, it's not only like restaurant owners, construction workers, like attorneys, like doctors, like doctors, like they deduct a lot. And I mean, there's almost any industry that you can think of. I think we've kind of like done a lot of them, even down to like a a pet groomer on like this was. I mean, but there is a possibility. It's just a matter of pairing down with the right team, getting things done. And again, like you know that you're making good money, but you're still gonna have to put some money down.
Yeah.
Now, like setting expectation, that's another thing that now going to the raw of it all. Like I've seen so many times on social media when they start like, I know it's a long shot, but like my client has no credit, no money, and he wants to buy a $600,000 house.
Yeah.
Can anybody help me? Like
Yeah.
and that's the big issue that's going on and on social media and so forth. Like people just setting up false expectations. Like there is hope, but they're gonna take the credit. It's gonna take some money down,
Yeah.
and it's just a matter of the team. But what do you think? What do you think when you see like those kind of posts? Like,
Yeah, it's kind of frustrating, right? Because they give people false hope. But I see why they're doing it. They just want to try to get that person to inquire, because that person doesn't know what they don't know. You know what I mean? They don't know what guidelines are out there they could potentially qualify for. And, some might be surprised. They might actually apply and be like, wow, I'm closer than I think. I only need to do this, and now I could be pre-approved. Others might be further along. It might take them 6 months, a year to be in a buying position. But that's why it's important to work with somebody like me, like yourself. So, yeah, it's kind of frustrating to see those ads, because it does kind of inspire false hope a little bit. You have to think of if this were your money, right? If you were the bank, if you were the credit union, how would you manage that risk? Are you going to give all your money to somebody who has a low credit score, has never paid a bill in their life, or has a ton of collections, has no money down, they can't invest or have any skin in the game, so to speak? Maybe has multiple jobs over the last year. It's tough, right? Because the risk keeps like layering in itself, and then it gets higher and higher. And so if you could mitigate that risk, I think that's kind of the whole point of these programs. You know what I mean? Like the bank statement program, is they say, okay, well, we'll be willing to take a chance and calculate income a different way than the traditional methods, but you need 10% down now versus 0, right? Or versus 3% or versus 5%. So, it's just managing risks, and that's what these investors are doing. So,
yeah, that's pretty good stuff. Now going back to like the other types of loans that people like, I mean, probably already know, but again, because there was like that idea, like it's like the first time homebuyer program, but everybody associates that with just like the FHA. But then there's also like citywide assistance programs that people don't know, or agents don't know, that sometimes people can come in, and if they do have the credit and they do work like in a fast food restaurant or so forth, but they don't have a lot of money, like there's programs that can actually help those people within certain guidelines.
Yep. Absolutely. Yeah. There's a lot of programs out there, down payment programs, there's grants, there's stuff on a nonprofit level, city level, government, nationwide level. There's all sorts of different ones out there. When we give a consultation, we have somebody apply with no expectation. And what I like to do is I like to look at it from every angle. What's going to be best for this client, right? And take a look to see if maybe one program is better than another. But all that has to be uncovered by the actual person, right? Because no two people are the same. No two families are the same, right? What your goals are might be different from the other person's goal. Maybe a T-Shack program for them might work great, but you might need the HIP San Antonio program, So it all depends on the family, but having that consultation, finding out what your needs are, finding out what your goals are, and then we help you align with the right program. So we uncover that for you. So having the ability to look from different angles is extremely important.
Absolutely. One of the very common scenarios we see is like, well, Uncle Pancho makes $50,000 a year, and Uncle Juan makes $50,000 a year, but they approved one and the other one got denied. It's like, well, what's going on? They'll both make some money. It's like, there's debt involved, there's credit involved, there's so many things involved. So it's the matter of just reaching out to an agent, reaching out to a loan officer, and getting that idea out so you can get that blueprint, get that layout. Because even if you're not ready now, like we just talked about, like you can get into a plan. They can get you ready in 3 months, 6 months, and so forth. Now, what do you think, based on everything you've seen, is the main factor that stops a lot of people from buying a house or reaching out to a lender? What do you think that is it that you think like it's fear,
I think
just not knowing?
I think it's fear. I think fear cripples a lot of people in a lot of different scenarios, right? And I think that somebody might say, you know what, I had a repo 5 years ago. I'm not going to get approved, right? They jump to that conclusion. Or I just filed bankruptcy 3 years ago. Why would anybody give me a house, And there's programs that work around bankruptcies, So I think it's a false assumption. It's fear. But there's nothing to lose. When we pull pre-qualification, we actually do a soft credit pool. Doesn't even impact your credit score. You have absolutely nothing to lose. All we're doing is talking and gathering information. I'm a firm believer that the person with the most information is going to win. And our clients need to be in winning positions. They need to be able to gather all the information so that they could win and get a house or do whatever they need to do. We have to uncover what's out there. We have to dive in and look. But I think fear cripples a lot of people because they think, I'm not going to get, you know what I mean? They don't know what they don't know.
Frank, but how much is that going to cost me, man? Are you going to charge me for that self-pool?
Yeah.
I don't have that kind of money to be.
It's all free, man. All free.
And then that agent, how much is he going to charge me to be able to get that consultation?
That's free too, right? So we get paid when the deal closes. That's how we get paid.
So that's one of the biggest things that people need to realize, like the services to be able to put you on a plan, to be able to guide you through the process. I mean, it's not going to cost you to know what you need to do.
Yeah.
And if you're on that edge that you might think that, like you're saying, like, oh, I had this happen, or I had that other thing happen, or I just got divorced, or whatnot, you only know what you know.
Yeah.
And it's best to reach out to a company, be able to help you out. Professional. And not just ask ChatGPT. Because I know like most people will be like, well, ChatGPT, I had these reports. It's like, and we're like, well, yeah, you can get your house, you can get that, like, and it's funny because like people still think like, I've seen some posts like AI, like a buyer's asking if the house was worth what it was worth. And then AI was telling them, no, it's not worth that. It's worth 300 because this isn't that. And then the seller's like, am I selling my house too cheap? And he's like, yes, you're selling your house too cheap because this isn't that. And then like, it's an AI, different personalities. And one of these people don't realize is that the AI is engineered to please you. So whatever you ask it, it's going to always give you the leeway.
Interesting. Yeah.
And there's this meme going around. It's like, well, nowadays, like, it's not just pulling comms from like local MLS, but now you're gonna have to pull comms from like 5 different phones to see what the AIs are talking about.
I like the analogy where like the guy's sick and he checks WebMD, goes online. These are my symptoms. Oh my gosh, I have cancer. And he goes to his doctor, look, I have cancer. These are all my symptoms. The doctor's like, man, you just got a flu, So you don't know unless you talk to the professional, right? Someone that's actually seen it. So a lot of people could take that upon themselves and think that they know. I mean, there's a lot of information out there, right? But you also have to know, like, what is a company able to do? Are they able to play in the gray space? Are they able to, do they have different investors that could take on different types of risks? All that matters. So,
yeah. And that's what sets most companies apart, even like for our teams, like, we don't just play the traditional way. We know the traditional way because that's kind of like knowing Spanish. Like I know how to speak Spanish, but I also know how to speak English. Yeah. So if you go to somebody that only knows how to speak certain language, it's like you're saying, like going back to the doctors, like if you have a heart problem, you're not going to go to the podiatrist to check on your heart.
Right.
But people think that because an agent has a license that they're aware and they know all kinds of stuff from the license, but there's specialties for everything that we do.
Oh, absolutely. I agree. What do you specialize in, by the way?
We specialize in all business owners, entrepreneurship, non-QM, regular, traditional. We help a lot of vets as well. And we also do investing. So like you were talking about, like one of the things that people don't realize that's happening still now is that with the new homes, like you might buy a new home, and if you're not planning to live in that home for quite a while, and you're thinking that you need to move out within like a year or two, like there's builders that are competing against the other people that are trying to sell their house. And I've gotten people to call me to be able to list those properties, and I just have to be setting those expectations. Is like, even if we reduce this price by this much, the builder's given a brand new house with incentives, with buy downs, with this, with that, and you're still gonna be negative. And the worst thing is, like, right now with the current economy, is like, if you try to lease it, which that's the next best thing you could do, 100 other people are in the same spot as you are, and then like everybody's leasing. So like right now the market is just on those new subdivisions, like the rentals are a little bit low and people are struggling because now they can't afford the house. They were told sometimes by loan officers that they only calculated the principal and interest, and because there's no tax on the land yet, they didn't calculate that percentage for the land, and now they can't afford the payments.
Yeah, it's a tough.
So
we see that all the time too. Yeah, that's the so what we do with new builds, because we do a lot of new builds as well, we'll anticipate what the taxes will be, and it's really easy calculation. Find the tax rate, and then try to estimate 80% of whatever the house is, selling for. That should hopefully get you pretty close to the appraised value, and then you have your taxes. You have an idea what your taxes could be. So I know that inflates the DTI a little bit, but it puts buyers in a really good spot. Their escrow accounts aren't short. They're not going to have a huge increase in next year in their principal, interest, taxes, and insurance payment. It's going to be very smooth for them. So again, that falls back on the lender and the institution. If they don't know those things.
Yeah, and going back to the other thing you mentioned about the homestead, people don't realize, and if you're watching this and you have never heard what homestead is, reach out, leave a comment, and I'll help you set up that homestead. Because believe it or not, there's a lot of people that they have their primary houses and they haven't filed for homestead.
Oh, I believe it.
And they could be saving thousands of dollars just by filing that form. So
yeah,
you providing that service. I mean, that's another.
Yeah, no, we love to help our clients with that too. It's part of my closing disclosure with them. So prior to them even going at the closing table, we have these conversations, and we tell them, like, after you close, wait a couple weeks, get everything transferred over as your utilities, let the deed get registered at the county. That way, appraisal district could recognize it, and then go file your exemptions either in person or online, and we help people with that. So, and there's also more exemptions people may qualify for. There's a lot of veterans that have higher disability ratings, maybe 60, 70, 80%. They'll get discounts as well. If you're 100% service-related disability, that's the best way, right? You wipe out all your taxes. And we qualify people without those taxes up front. So if somebody's buying and know that they're 100% disabled with a service-related disability, we just waive their taxes altogether. So it allows them to buy more house if they need to.
Absolutely.
Yeah.
Now, just to quickly wrap up here now, tell me, like, as far as on your experience, one of the toughest deals that you've had with a client, like we're right in the middle of the mud, and what did you guys do for them to be able to overcome it?
Yeah, sure. So some of the toughest deals I think out there are going to be your condos. Condos are just tough, man, because there's so many hands in that cookie jar. There's a HOA, condo association. You have to get a master policy from. You got to find out if that condo is a warrantable condo, non-warrantable condo. Is it a condotel? Like, there's just so many different obstacles with condos. Is somebody in litigation? Is there a lawsuit going on? All that stuff matters, and it may not affect our buyers specifically, but if it affects the association, kind of leaks up to our buyer, because they're part of that association. So condos are very tough, and I've had situations where condos, they just go south. Like I had one recently where everything was going as smooth as possible. I mean, as easy as it could be. I mean, I was on top of it. Well, we received the fidelity coverage from the condo association master insurance policy, and it was short. There has to be a minimum fidelity insurance coverage amount based on the number of units that they have, and they weren't properly insured. So it's like an act of Congress, right? Like you have to go to the board, condo association board, they have to vote on it. Are we going to increase our dues? Are we going to increase our coverage amounts just to have somebody buy a house, or condo? So those are the type of deals that you run into. And if you don't have the proper outlets, if you need to pivot, that ended up being more like a hard money deal than an actual just regular mortgage. That person could have just lost everything. You know what I mean? I mean, granted, most people buying condos are like investment properties or second homes, that kind of thing. So he wasn't gonna. He still had a place to sleep at night. You know, he just didn't have a place to go to the beach. That's it. So yeah. So having those outlets matter.
No, I had 4 condos. I did Airbnb.
Okay.
I had 4 condos, and I sold those.
You know what I'm talking about.
And then when we sold them, it was fine. But then another partner, like he had another 4, and he was trying to sell those. And then there was an issue with the roof, and then like they couldn't get that approved, and they had to go through like the whole lot of process just to see if they're gonna pay up that claim for the roof, or they were not gonna pay it. And now they have to be like, fortunately, we would have waived it because we proved that condo unit was in a different building.
Okay.
And that roof there was fine.
That's perfect.
But like you're saying, like people don't realize, like just because it's cheap, there's a lot of stuff maybe that's gonna come, because condos, like when I talk cheap, they're probably like in the 150s,
Okay.
180s or so, like really affordable. But there's so much things behind them that again, going to a professional, being able to make sure and check, and sometimes you can't even check fully until you're like in the middle. But the thing is having the resources to be able to pivot to a positive outcome, and then they don't have to be like losing that much money.
Oh, absolutely. There's things that you don't know. Like we could pull title right now and we won't know what's on there until we see it. We could, request for insurance coverage. Come to find out they don't want to insure it because previous claims on the roof or something, There's all sorts of stuff that's uncovered in the process. But it's knowing, back to that surgeon, if you start bleeding out, you can have somebody that knows what to do or not, So that's why I'm a firm believer that not all lenders are built the same.
Yeah. So we have the raw steak, you see all that blood, because we're already used to
You've seen that thing too, huh?
All right, guys. So if you're an entrepreneur and you're looking to purchase a house, we're here to help you out. There's different ways, there's different programs. It's just a matter of finding the right team. So make sure to reach out to one of us and we'll make sure to lead you in the right path.